Here's the introduction for the Walmart. Walmart Store Inc., branded as Walmart, is an American multinational retail corporation that operates chains of large discount department store and warehouse store. And Walmart is the world's largest company by revenue, according to the Fortune Global 500 list in 2014, the biggest private employer in the world with over 2 million employees and the largest retailer in the world. Walmart is the family-owned business, as the company is controlled by the Walton family, who owns over 50% of Walmart through their holding company, Walton Enterprises. And Walmart began trading stock as a public held company on October 1, 1970, and was soon listed on the New York Stock Exchange. The first stock split occurred in May 1971 at a market price of 47. Currently, it appears to be fairly valued at 77 of share price. And the Walmart is three parts. Has a three part. One, there are Walmart US, Sam's Club, and the Walmart International. For the Walmart US does business in 6 merchandise units across several stores formats, including supercenter, discount store, neighborhood market, and other small store formats, as well as Walmart.com. And for the Sam's Club sales during 2010 were 47 billion, equivalent to 50.8 billion in 2014. And Sam's Club is in the United States. Walmart also operates more than 100 international Sam's Club in Brazil, China, Mexico, and so on. For the Walmart International, as of January 2014, Walmart's international operations comprise 6,300 stores and 8,000 workers in the 26 countries outside the United States. And there are wholly owned operations in Argentina, Brazil, Canada, and the UK with 2.2 million employees worldwide. The company is the largest private employer in the US and Mexico, and one of the largest in Canada. In the financial year 2010, Walmart International Division sales were 100 billion, equivalent to 108 billion in 2014, or 22.7% of total sales.
First one is current ratio. Walmart has the 0.89 times of current asset to meet its requirement of current liability in 2011, and 0.83 times of current asset to meet its requirement of current liability in 2013. So, the Walmart store income current ratio is from 0.89 times in 2011 to 0.83 times in 2013. Number 2 is quick ratio. It means Walmart has 0.27 times of the most liquid asset to meet the requirement of its current liability in 2011. And 0.22 times of its most liquid asset to meet the requirement of its current liability in 2013. From this quick ratio, let Walmart store income quick ratio from the 0.27 times decrease to 0.22 times. Number 3 is inventory turnover. Walmart is able to sell off its inventory from 9.11 times per year in 2011 and 8.69 times per year in 2010, and 8.34 tons per year in 2013. From this calculation, we can know that Walmart store income inventory turnover is decreased from 9.11 to 8.34. Number 4 is average age of inventory. Walmart is able to sell of its inventory is in average of 40.07 days in 2011, 42 days in 2012, and 43.76 days in 2013. That shows the Walmart store income average age of inventory is increased from 40.07 to 43.76. Number 5 is average collection period. Walmart is able to collect its payment every 4.40 days from its credit customer in 2011, 4.85 days from its credit customer in 2012, and 5.70 days in 2013. It shows an increase about Walmart store income average collection period in the past 3 years.
This is total assets turnover. For every $1 worth of assets utilized, Walmart can generate 2.33 times of sales in 2011, 2.31 times of sales in 2012, and 2013 is same like 2012 is 2.31. The 7 is debt ratio. It means 60.59% of the total assets of the Walmart was being financed by debt in 2011, 60.53% in 2012, and 59.76% in 2013. Number 8 is times interest earned ratio. It means that Walmart store has 12.75 times of ability to pay off its interest in 2011, 12.30 times in 2012, and 30.45 times in 2013. Number 9 is gross profit margin. For every $1 of sales, Walmart generates 25.34% of gross profit in 2011, 25.02 cents in 2012, and 24.87 cents in 2013. The Walmart store gross profit margin is decreased from 25.34% to 24.87%. Number 10 is operating profit margin. For every $1 of sales, Walmart generates 6.05 cents of operating profit in 2011, 5.94 cents in 2012, and 5.93 cents in 2013. Walmart store operating profit margin decreased from 2011 to 2013.
Net profit margin. It is a ratio of profitability calculated as net income divided by revenues, or net profits divided by sales. It measures how much out of every dollar of sales a company actually keeps in earnings. For every 1,000 sales, Walmart generates 3.89 cents of net profit in 2011, 3.51 cents in 2012, and 3.62 in 2013. The Walmart's net profit margin decreased from 2011
2011 to 2012, but increased from 2012 to 2013. Earning per share. It is the portion of a company's profit allocated to each outstanding share of common stock. Earnings per share serves as an indicator of a company's profitability. For the Walmart, for every $1 of common stock equity, Walmart is be able to earning $4.48 for them in 2011. $4.54 in 2012, and $5.04 in 2013. It shows there are increase from 2011 to 2013 in earnings per share. Return on total assets. It is a ratio that measures a company's earnings before interest and tax against its total net assets. The ratio is considered an indicator of how effectively a company is using its assets to generate earnings before contractual obligations must be paid. For the Walmart, in 2011, return on total assets is 9.07%. In 2012, it is 8.12%, and in 2013, it is 8.37%. It shows the return on total assets is decreased from 2011 to 2012, but then it increased from 2012 to 2013. Return on common equity. It is the amount of net income returned as a percentage of shareholder equity. Return on equity measures a corporation's profitability by revealing how much profit a company generates with the money shareholders have invested. For the Walmart, every $1 of capital invested, Walmart can generate 23.67 cents of returns to its shareholder in 2011, and 20.01% in 2012. And 22.027% in 2013. Walmart, the return on common equity decreased from 2011 to 2012, but then it increased from 2012 to 2013. Price-earnings ratio. It is a valuation ratio of a company's current share price compared to its per-share earnings. Walmart investors are willing to pay $11.69 for each dollar of Walmart's earnings in 2011, and 13.46 in 2012, and 14.64 in 2013. It shows the price-earnings ratio increased from 2011 to 2013. Market or book ratio. It is a ratio used to find the value of a company by comparing the book value of a firm to its market value. Book value is calculated by looking at the firm's history cost, or accounting value. Market value is determined in the stock market through its market capitalization. The investors view the firm's performance as 2.79 in 2011 and 2.96 in 2012 and 3.3 in 2013. It shows the Walmart market book ratio increase from 2011 to 2013.
As a conclusion, we had analyzed the financial status of Walmart Incorporated, and we realized that the company is doing very well, and the figures of the company are growing tremendously in terms of their finance. So the company has a very strong income stock, and they make it a good potential company for people to invest. Besides that, as we had analyzed the Walmart past 3 years financial ratios, the company within that period, their performances did drop slightly, but as we can see from their 16 financial ratios, the company had 7 out of 16 ratios were doing increasing trend, and they had made their debt ratio decline, where it's good because it has more ability to expand their company. So it shows that the company are doing well and do not disappoint their